Hey, my name's James Nicholson and welcome to my YouTube channel. Some lenders are dropping their interest rates. It's been called a significant drop by the media. I think I agree with this. And this is really good news because what's happening at the moment is lenders are fighting over your business. You see, their lending is down around 20% at the moment. And they make money by lending to people like you and me. And that's very important that they get the market moving again, get some deals in their plate. And by offering a better rate to you, that gets you to take some action and actually start spending money with them. So we're going to talk about that and more in this video. So while you're here, if you haven't done already, subscribe to the channel over there and hit the bell notification. We're so close to 19,000 subscribers now. I think we could hit it this week if we have a good one. And while you're here, smash the like button, tickle the like button, do something to the like button, guys. That really helps us with the YouTube algorithm, can't even say it today. It gets more views on the content. And last year we got 2 million views. This year we want to hit 5 million. So every like helps. So big lenders last week, we had Halifax and we had HSBC that dropped their rates. Some of those deals were below 4%, which is very, very good. What's interesting is that means that we're actually close to rates that people previously had. Now, while interest rates went to 0.1%, not many people had deals at that. A lot of people were getting deals on the average was around 3%. So we're quite close to where we are. So that's good news for the 1.6 million people that come off a fixed rate mortgage this year. I think more competition could ensue and rates could come down to close to what they were at. And that will make a very, very big difference. So who do we want to talk about today? Well, two lenders. We've got Barclays. And let's look at what they're doing. So Barclays is a big lender. Obviously, you know them as a bank, but they do lend a lot of mortgages out. And they have significantly reduced their rates. Now, between the two lenders, we're going to talk about Barclays and Santander today. On average, they're down 0.82%. So nearly 1% drop. This is very, very good. And not perfect, but it's moving in the right direction for sure. And so this is going to help a lot of people. So Barclays have dropped their rate for a 2-year deal. And they've dropped it by it's down 0.5%. And the deal that they've got is 4.17%. This is their headline deal. £899 on fees, and it's for 2 years. Now, let's look at that. Now, that's not a bad deal. Some of you will say, fees, these are way better. If you can recall, which I can, because I've been making videos for a year on this stuff, this time last year, just after the mini budget that we had, there were fees out there that were £4,000, £5,000, £6,000 on residential mortgages, which is crazy. And so this is a bloody good rate. And the fee is more realistic. That's what people are used to paying. £1,000, you can add that onto the loan. No real hardship. You've got a 500 grand house. Are you really going to notice £899 added onto the debt that you got? Probably not. 2 years, I think, is not a bad deal as well. A lot of people expect interest rates to come down in that 2-year period. At least the Bank of England rate is going to come down. I don't think that you're going to get the rate that you can borrow at dropping significantly much more. I reckon there's about 0.5% left to go. I think even when the Bank of England gets down to a 3% rate, you're not going to start seeing 2% rates. I think you're going to start seeing 3.5% rates. So it's not going to drop massively more from where we're currently sitting at the moment. But 2-year deal kind of will get you through this slightly raised interest rate period. And hopefully in 2 years, you'll have a way more realistic interest rate in the market. So that's a good one from Barclays. Santander, what are these guys doing? Santander. Is there any left of these? We don't have all the Santanders where I live in Surrey have gone pretty much. But I guess some people are doing online banking with them still. They've got a really good rate here, under 4%. It's for 5 years. The rate is at 3.89%. and the fees are £999. Now, I don't feel that you're going to get much better rate than that by the end of this year. And I think for those people that like certainty, which there's tons of people out there, you've got an option right now. Let's just say, for example, your deals come to an end in January, February or March. In that time, rates could shift a little bit. But if you went on to the variable rate, it's going to be around 8%, which means you're going to be paying crazy money. Is it worth waiting on that variable rate, hoping that rates will drop later this year? I don't think it is, because the extra payment you're going to make and the saving you're going to make isn't going to give you that much wiggle room. So I just feel that you should maybe consider a rate like this. I think that's not a bad rate at all. Remember, we were looking at rates of around 6.5%, 7% a year ago. So this is massively down. Now, with both of these, you need a 40% equity in your property. Now, always people will comment on this and say, well, who has a 40% deposit? This is really suitable for someone that's remortgaging or refinancing. So that is a lot of people, and that's most people would have big chunks of equity if they bought a long time. More than half the market this is suitable. So when you look at this and you say, this doesn't help first time buyers, it doesn't, right? Unless you're quite wealthy and you've got a very large deposit, this isn't for you. This is for you if you're refinancing, remortgaging, and you want to keep your house, right? And that is a lot of people. So I think this product, these two products are going to make a big, big difference. But my opinion is you're not going to see massively better rates this year. I reckon 0.5% better, which is still very good, don't get me wrong, but I don't think you're going to start seeing 2.5, 2.95, anything in that sort of region. I think 3.5 is probably going to be the best rate that you could get this year, and that still might not even happen. So this is what's going on. The Bank of England are meeting with the politicians today. Andrew Bailey is doing a discussion on where he feels interest rates are going to go. So I'll be doing a video from that if anything exciting comes out from that, if they start talking about where they feel interest rates are going to go, because they're not going to outright say. A lot of people don't quite get this. The Bank of England are not going to say, in March, we're going to drop interest rates. Ask yourself why. The reason being, if you were going to refinance today and they said, look, interest rates are going down 2% in March, you wouldn't do anything today. You would wait. That means all transactions would stop. Solicitors would be just sitting there twiddling their thumbs. So would estate agents. So would anyone, mortgage brokers. All of these people involved in the chain will just have no business until that happened. And so they're not going to tell you when they're going to drop the rates, but they might subtly hint that something could happen this year, or that they feel that we peaked in inflation. All of this stuff is important to listen out for, the subtle undertone messages from that. So what do you think about these two deals? Anyone interested in them? Comment below. Look, we launched a new course this week. More than 100 people enrolled on the first day, which is crazy good. You can get it this week for just £29. That is a one-off payment. £29 will get you full access to the fundamentals of property investing. I'm going to link that in the description below. Make sure you grab it before Sunday, because the price is going to be going up significantly. But right now, £29, one off. You will learn everything you need to know about property investing. This is the time to learn that stuff. So go and check that out while you're here. Do check out all the other content. Like the video if you didn't earlier. Subscribe, hit the bell, and go and watch this video right here.